Welcome to TradeTheMDI.com. This is John. This report is for the 16th, and well, here we are. We got the buy signal came in the other day off the nice little pump. We went flat for a day, and here we see a nice little rise back above the ABM yellow point again. We're seeing the shakeout starting to return after the little crazy event, but this is almost identical replay to what happened back over here at the end of May. So we're seeing very like behavior as far as that goes, and we saw even better set up here on the extreme. So interesting, but not all that big a surprise. And again, we still have the ABM and now the other values to play with, because it just provides, at least from a daily standpoint, if you're not doing intraday or whatever, you've got all the different ABM levels that can be stop points and adjustments below. What we're really looking to see now is a move towards that 2485 range and beyond. That really becomes the critical element towards drawing everything towards that big 25, at least for the NES. For the NQ here on the NASDAQ, already above the ABM gold, so strong move. And it eclipsed all of it much quicker. And so this because it took a little bit bigger beating, and so it had a little bit further to come back, but it's actually eclipsed the overall run and making strong progress when you see the number of jobs being created, the potential for, even Trump talked about it the other day, wage increases. That kind of pressure is going to spur a little bit of inflation, which should make the U.S. a very attractive place. The euro, though, still holding on strong, seemingly rather high for current situation there, as well as what's going on in the U.S. The fact that bonds maintain this elevated level, it represents this uncertainty where people think that this market is overbought, and they would just be a little bit confused. They're not taking into account a lot of bigger factors that weigh on multiples and that, and the change in that dynamic. They're still too focused on the way things were from pre-crash era and low, no growth policy. When you have growth inflationary policies that are being worked into it, that should send rates further north. The question will be, though, will the Fed go too fast and try and put a quash on it? That remains to be seen. And then also, of course, deficit, infrastructure spending, some of these other things that really would propel a move over 3% growth. If you get that number, that's only going to fuel itself for added years where people have greater and greater optimism, and it makes a big difference. State of mind is everything in markets as well as in actual economy. Oil, nice little rebound here again, of course, coming off that ABM. We had a little short signal that was there, not quite done yet. With a nice reset here with the short-term buyers, but you're not getting them acting with midterm in that, so it may be fleeting. Though we did see huge increases in the amount of capacity, which if supplies remain where they are, even though they're elevated, with the amount of extra capacity that you're putting into the market, it's an indication that it's getting used up. I think we saw Home Depot indicating that they were having record sales, which is another indication that housing and some of these other areas are moving along, and that also is going to have a broader impact 4, 5, 6 months down the road, and that's really where the market is looking, and maybe even a little bit beyond that, potentially. Gold, not a bad rebound. Of course, it's going to move into a short setup right here at this particular point. A little bit of weakness. The thing is, you've got cyan under red, and so that's going to help keep it going. And here we look at the 5K. It was interesting. You had the, I don't know if I scroll back a little bit from the other day. Let's do that. We can see we had our nice little uptick that was going, and then we could see that we were going to have our retrace that was going to take us back to fill the positive extremes there. Did that, and this was that rising low that I talked about, where there's no new high, and then all of a sudden we started getting new highs, so that broke it out. But then when that plateaued and then the lows started to climb, we ended up going right back down to the lows right there. And I mean, lows as far as the Fibonacci retrace level is not lows from any other broader standpoint. But it just took out what the dip was, and so then we've just gone flat. And I mentioned that we were just going to be like in a stagnation, but the bias was still going to be to the upside. Now we've returned back pretty close to those levels right there. We're just a fraction below it, so a little bit more of a pop, plus 10. We're already up 6 pre-market. A little overbought here. If I move the buy signal that came right there, you can see that didn't quite get into a positive extreme. So you can see that this initial breakout here was a little bit stronger with a lot of new buyers and well over that 50% number. So the question would be, we're going to break out into new highs and get back up to these upper levels here, in which case all the gloom and doom talk again will have been for naught, and it go from there. It's typical blah 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 blah, and that's perfectly all right. We're just going to continue to expect what the readings give us, and at this particular point, it's not been bad. We had that turnaround point, and we could see the parallels to what was taking place from before, and it's not a bad move at all. So no objections to it whatsoever. We'll keep trading it like it is. As always, though, could you look for me on the Skype chat? Trade well.